There's a big fear that inflation could get into double digits very soon. We're already seeing the CBK taking action by way of raising interest rates and coming into the market to try to mop up excess liquidity of shillings. Are all of these efforts working?
It's going to be a process. In fact, we've already got inflation of 12.05 in the month of April. And what looked like very attractive bond yields a year ago are not so attractive anymore. And as a consequence, many institutional investors are coming down the yield curve and reducing their maturities and taking more of a wait-and-see attitude.
All right. Now, if investors are a bit concerned about bond yields going forward, what bearing does that have on short-term papers, I would assume, versus long-term papers?
Correct. Over the last 18 months or so, the Treasury bill rate in this country has approximated 2–2.5%. This week, it's probably going to come out at about 4–4.5%. You're seeing a very rapid change in the interest rates on the short-term paper.
All right. Now, what sort of things need to be done to mitigate the situation? Because as I'm talking about, interest rates is one element, monetary policy, but it almost seems as though the shilling is taking a life form of its own, and those are all variables that investors consider.
That's correct. There's a couple of things at work here. First of all, I guess you'd have to put on the table the fact that our domestic budget deficit is ballooning. It's increased to, I think it's 1.4 trillion shillings, which is approaching 60% of our gross domestic product. So this is a slow but pernicious effect. Mm-hmm. Then we're importing inflation through the back door. As you said, the price of petrol and sugar and commodities is all having its effect. Mm. And consequently, the cost of living here is beginning to increase very rapidly, right. Yes.